Hello and welcome to the What the Finance podcast, where we talk to experts about all things finance. If you get value out of this episode, please subscribe so you don't miss out on any in the future. I hope you enjoy.
Victoria, thank you so much for joining the What the Finance podcast.
Thank you.
I was surprised when researching about you that you were involved in crypto very early on. I think it was 2011.
Yeah.
Can you talk more about your journey in crypto and sort of how it's evolved since then?
Yeah, sure. So I started getting involved in it from a personal level. So I'm a bit of a nerd in my private time. So my other half and I started to play around with mining. So in the beginning, we were just using our own graphics cards and seeing what it would do and what would happen. And then as time went on, we started investing more into things like grid seeds. So having just like a huge rack of them in the spare room. And, you know, when we're recording the podcast today, it's currently about 30 degrees outside. That was basically what it was like in our spare room throughout the whole of the year. Never had to pay a heating bill. It was great. Because they were just pumping out hot air all the time. So we sort of started off with that. And it was very much just this is a bit of fun. Not really sure if it's going to go anywhere. Who knows what will happen with it. And then obviously as time went on, we had sort of the initial like big spike when it went up to 1,000, and everyone was saying to us, oh, you need to sell what you have because it's never gonna be worth any more than this. You know, I thought, no, we'll just sit on it and let's see what happens. And, you know, we sort of did a thing because we never put any money into it because we just used our existing graphics cards. So it was like, well, we don't have anything to lose if it tanks, so let's just carry on having fun. And then around 2017 is when we had the next big spike, and around that time I just started to notice that my work was bleeding into the crypto side of things. So it just started to become slightly more mainstream. You know, there was the idea that actually somebody could come through the door with this as an asset, and not only that, but oh look, it's now worth, you know, nearly $20,000 a coin. So there was an element of, right, so not only is it becoming more popular, it's also becoming much more valuable, which means it's going to become much more important that people receive the right advice and the right information. You know, it matters. It's going to be a pivotal asset in some cases. So the firm I was with at the time, I'm not with anymore, I tried to sort of create sort of a group of us within that firm and say, look, you know, let's jump on this. Realised that nobody else had any idea what I was talking about, and then realised that actually there were so few people in my profession that had any idea what I was talking about, and it made me realise that I was a bit of a, for want of a better phrase, a bit of a unicorn in the environment, in that I had this, on the one hand, an in-depth knowledge of this asset and this technology and how it all worked, and on the other hand, being a family lawyer at the same time and recognising that it's going to be something that becomes part of my day-to-day job. You know, my day-to-day job is helping people figure out how they're going to divide their assets as part of a divorce. That's inevitably going to include crypto at some point in time. So I sort of went off on my merry way and just started networking in various crypto groups, because, you know, we all have in my profession that little black book of contacts who can value companies, give us tax reports, do all of those sorts of things. But when it comes to crypto, there's tumbleweed. You know, there's just nobody in that area at all. So I thought, well, I can't really advertise myself as a specialist in this area if I also don't have experts in this area as well. Yeah. So let's go out and create that structure. So I went out and tried to meet people and tried to get to know people. And it was one of those things where it was almost slightly too early. So what you saw back then was actually a lot of really valid business ideas of how to incorporate blockchain or Bitcoin or any other token or coin. But because it was such a new concept, the user interface just wasn't there to make it a viable business. Do you know what I mean? So, you know, like there's this one company that I spoke to back in the day where they were creating a way to have your will and the details of your estate recorded on their blockchain. So everything would be recorded, everything would be permanent, There wouldn't be any dispute between beneficiaries of who was going to have what. And then they also had this structure where you could upload your coins onto their platform, and then they had keys that they would give to the executors and all of this kind of stuff. Really good ideas, but the problem is it's all aimed at people between the age of 30 and 45 who the last thing they're thinking about is, what am I going to do when I die? You know, so it's so hard to kind of get in that market and sort of hit it at the right time. So it was a bit thin on the ground to begin with. Not too many experts were around. It was more entrepreneurs, people seeing this as an opportunity to make a quick buck. You know, at one point I had someone telling me that they were going to tokenize water. So yeah, oh yeah. Yeah, and also think about, this is back in the day when ICOs were the new flavor of, you know, the month. Everyone was like, oh, this is how we're going to make our money. This is how companies are going to be structured now. And of course, we all know that over the last 2 or 3 years, that castle has gradually crumbled down. So yeah, so it was a lot of suck it and see. Let's see who's out there, let's meet who we meet. And through that, there used to be a Telegram group back in the day called the London Blockchain Mafia, which, you know, sort of does what it says on the tin, really. So we used to meet up in London, and it would just be all sorts of people that were involved in the crypto space, really interesting people from all over the world as well. And that's how I met a woman called Erica, who has been on your podcast too. And so she was thinking about starting some sort of networking group around curry. And I said, yeah, sounds like a great idea. So she started the Crypto Curry Club, and I gave the first talk at her event. And I remember it was in this tiny, really nice Indian restaurant in Mayfair. There can't have been more than 20 of us. Now it's just huge. You know, now you're getting between 40 and 50 people coming to an event at any given time. So it's really grown. She's done such an amazing job. But that very much started a real progression in me meeting the right people and making the right contacts. So I started meeting tax advisors, forensic accountants, people who also specialize in the forensic side of the analysis of, you know, wallets and trading platforms. And, you know, if the tokens have gone from the wallet that you're disclosing, how do we figure out where they've gone? How do we prove that they still belong to the person that transferred them out of their wallet to begin with? All of those sorts of little things. So that's sort of where it's got up to now, where I'm actually firstly getting way more clients coming through that have it. You know, 2018, 2019, you had this weird scenario where loads of people had bought it in 2017, then nobody wanted to talk about it because it was worth nothing.
Yeah,
well, not nothing, but it was worth significantly less. You know, I can remember the days when Bitcoin was worth 100, but there we are. So it was, yeah, so it was, a few people were kind of coming their dribs and drabs, but now very much the people are coming through. And I think it is actually because those people would have invested in 2017, and as sad as it is, it's taken this long for their relationship to break down. You know, so then that's why we're now having that conversation.
Yeah, definitely. I guess that's the issue also, because as you said, it's all about dividing it up. So would you sort of say when dividing it is all based on the currently like value of the asset, or is it based more on future as well? How does that sort of work?
So I would say it's a mix of both. So for example, a lot of people who have been in it for a couple of years, not only will you have your standard bread and butter tokens like, you know, Bitcoin, Ethereum, some Ripple, maybe some Litecoin thrown in there, but you also have your airdrops. So you have all of these random tokens that just appeared in your wallet and seemingly have a value, and then tomorrow have no value. So quite often I won't necessarily place a lot of value on those, because the viability of the technology behind that airdrop, more often than not, is not going to retain its value. And the reality is airdrops, you want to try and sell those as soon as you can. Like, they're going to only go down in value based on what I've seen in the past. So I think there's an element of understanding the assets, understanding which are the ones that you want to either be protecting for your client or going after for your client, depending who's holding the tokens, right? And then you've also got things like There are still some companies out there who sort of were ICOs a couple of years ago, who are now talking about the fact that they're going to be releasing tokens and then you can sell them and all of these sorts of things. So for example, you know, there's a company that I've been reading about recently called Cypherium. That was a company that a lot of people invested in 2018 because they thought that it was going to make a lot of money. It's still active and they've said that they're going to be releasing everything in October. So there's an element of, okay, that could be worth a fair bit, but we don't know right now.
Yeah.
But what I would compare that to is in sort of company structures, what you quite often get at sort of high-end level jobs is you get called share options. So as part of your pay, you get given shares which cannot be crystallized for another 5 years. So you don't know what those are going to be worth in 5 years' time. And then there's also caveats. So for example, if you resign from your job before those 5 years have expired, you lose those share options. Or if you're made redundant, they're reduced. So how do you quantify the value of that asset within divorce proceedings? And the answer is you quantify it as, if you disposed of that asset tomorrow, what would be the net value? So if those share options are not going to be realizable for 5 years, they are not worth anything right now, but they have to be borne in mind. So, you know, when you're doing a divorce, when you're splitting up your finances, you're not just thinking about what do I need in the short term, you're also thinking about what do I need in the long term. So if we know that somebody has share options that are kicking in 5 years' time, you might have a delay on the interest, or you might say, well, that person's going to be fine because they'll have the share options in the future. I guess you could apply the same logic to something like Cypherium, and you could say, well, look, you know, this is the anticipated value of the token, so this is what we think you're going to be receiving. I would say that that's a bit more of a sort of put your finger in the air and see where the wind's blowing sort of thing. It's not quite scientific, which is why it carries a lot of risk. So, you know, there are a lot of family lawyers out there that are working with these assets and have no knowledge of how they work. You know, they're working blind. So the risk you've got with that is, how do you accurately guide your client in how you manage this asset? You know, it's really important for people to understand those assets, and if they don't understand them, to reach out to people to bring those people in who will help them understand. You know, if we have a pension, I'm not an actuary, I don't understand pensions in the way that they do. So if I have to divide up a pension, I'm going to be going to the actuary and getting their advice before we do that. That's just sort of doing your job right. But, you know, with the value on a day-to-day basis, you're always updating the values of the assets in any discussion anyway, because they're constantly fluctuating. You know, it takes between 4 to 8 months to come to an agreement as standard. Do you think even your house is not going to be worth the same at the beginning and to the end of that conversation? So everything fluctuates. It's just keeping track of it, really.
Yeah, definitely. I can imagine it's very challenging, especially in crypto. So sort of looking at how it's treated legally, how is it compared to other assets? Is it sort of the same or different?
I would argue it's exactly the same, but the difficulty is the court doesn't understand them in the same way. So the problem I am finding at the moment is judges are being quite dismissive of them as a viable asset within proceedings, which means that they're not being taken as seriously as they should be. So the problem you have is, if one party has the asset and is deliberately trying to undervalue it as part of proceedings, if I'm on if I'm on the other side of that conversation, I'm trying to convince the judge that they have undervalued that asset. But if they don't even understand that asset to begin with, that's already a big hurdle to overcome. So I'm trying to say, look, this is no different to any other share investment, you know, stock portfolio. It's just more unpredictable, but otherwise it is no different. And we are gradually getting there, but it is a slow climb. So what I've started to do more is work with what's called arbitration. So if you imagine the court is like your NHS, arbitration is your Bupa healthcare. So you pay for your judge, you book when you're going to have your hearing, you go to nice fancy offices and get given lunch. You know, it's not the court experience in any way, shape or form. But what that means is you choose an arbitrator that has a background knowledge in crypto. So then you already have someone with a good understanding of the area who's then going to make a definitive decision on your case, and you get it heard quicker.
Yeah, definitely. That sounds like a good way to do it. And I heard a podcast of you talking about how there was, you know, obviously legislation, they have all these ideas to do with technology, but oftentimes they don't work. Like I think they wanted to release both the private and the public keys to the court. Yeah.
So there was a case about, it was last year, so it was reported. I actually got involved in the case after it was reported because that decision was appealed. Because the decision that the judge reached was wrong. But the result of that was the barristers, so basically the barrister is the person that goes into court and does all the talking. I'm the solicitor, so I do all the paperwork, I do all the planning in the background. So the two barristers that worked on that case went off and did what they said was a standard draft order that people should use when they're seeking disclosure of cryptographic currency assets, right? So the problem with that is A, their case got appealed anyway, and B, the draft order says you have to provide your public and your private key as part of your disclosure. That's like one of the most basic things you could get wrong when you're talking about wallets. You know, asking for someone's private key is like asking for their PIN code. It gives you total autonomy over somebody's wallet, which is madness. So anyway, I sort of discussed it publicly that I thought that wasn't a good idea and that the criticism was not met well by the barrister involved. And I was shortly and sharply told to get back in my box, which I did not, but I certainly won't be relying on that draft order. So if they want other, the thing is, it goes back to what I said at the beginning of this issue of risk. You're going to have people that do use that order because the barristers that have done it are known and they are respected, which is why I was surprised when it was so wrong. So there are going to be people that use that now, and what's going to happen is there are going to be people that have wallets that say there's no way I'm giving you my private key, you can jog on. And then you're going to have the other people saying, well, no, I've requested it. You have to give it to me. Otherwise, I'm going to take you to court. And you've created a problem unnecessarily. Yeah,
and I guess the issue would be that once someone gets their tokens taken away, you know, I guess that's the concern. That would be maybe the turning point, but it's too late then, isn't it?
Yeah, exactly. And if you give your private key to another person and you're not in control of how they're using it and your wallet is emptied, how can you prove who did that? Yeah, if husband and wife both have the private key to that wallet and it empties immediately, how can you possibly prove who's done that? Wife could have done that and moved it to a wallet that's now under her control that she's not going to tell anyone about, or husband has done it and moved it to a wallet so he can hide his asset. But how are you going to prove who triggered that button? Because you've spread the private key around.
Yeah, wow, that's crazy. And are there other similar things that you see sort of in law that are similar to that, just, you know, simple mistakes?
Yeah. So there was, so particularly with things like ICOs or, so it's sort of the same structure, but basically where people are trying to tokenize companies. So they're trying to sell tokens in companies and use that as the way to fund the founding of the company, and then the tokens get released, blah, blah, blah. So the problem with that is the quantification of that asset within proceedings. So what you have is you have people saying, oh, well, those tokens haven't been released yet. And my company hasn't really made any money yet, so my company is worth nothing. And there's an element of, well, no, because you've had people invest 100 Bitcoin in your company, which is currently sat in a wallet over there. How can you possibly say that your company is worth nothing? Oh, well, no, because that wallet isn't connected to the company. What? Like, no, that's not right. So it's trying to hold the hand of the judge through that conversation, because sometimes judges, you know, they're tired and had a long day and they don't want to be talked through something complicated, so they just don't listen to you. You lose their ear, which is what you don't want to happen. So yeah, so there's a fine balance of sort of spoon feeding it to them, and it's also little things like, you know, they'll draft orders where they say you have to provide disclosure of all of the different bitcoins you have. And it's like, okay, no, that's not how this works. So it's just the little small things of just, you know, they've read the odd article, they've seen something on the BBC, they think they know what they're talking about, and then you see their drafting and you go, okay, actually, you are just BSing me and you've got no idea what you're talking about. Let's just amend everything. So yeah, that happens too.
Yeah, I can imagine. And we are sort of seeing sort of an acceleration of technological advancements, and I'm sure that's been quite a problem for the legal profession, because I think they run on precedents.
Oh, yeah.
It takes time. So do you think there needs to be sort of changes in how things are regulated?
Yeah, I think so. So, I mean, for example, my firm, we're quite modern in that, you know, we're totally paperless. We have everything online. We really believe in the value of technology, as do I. And so I think actually what the courts need to start doing is that they are trying to learn about it. So I helped organise a training event for the South West Circuit of Judges for them to learn about these sorts of things, because they are trying to educate themselves and they are trying to improve things. And one of the things they're also trying to learn about is the various types of technological fraud. So, you know, when you are fraudulently editing bank statements, the little things to look out for, what should be on that statement, but what isn't, you know, because when they're receiving everything in an electronic bundle, how do you know? It's very difficult. So those sorts of things are starting to improve and they are starting to move forward. But what I think needs to happen is there is still this preconception that this is a bubble and that this is going to go away. So I used to be president of Surrey Law Society, which is like a local law society underneath the umbrella of the main National Law Society. And so as part of that, I used to go to events to represent Surrey and all these sorts of things. And so at one of those events, there was a woman there and she specialises in what we call horizon scanning, i.e. she's looking into the future and seeing what's going to be part of the law and what's going to be part of what we do. So a lot of that is technology. So I said to her, I said, you know, what do you think about things like smart contracts? You know, what do you think about having, you know, conveyancing cases which are very much tick this box, press that button, formulaic on a blockchain, so that each step is recorded on that local blockchain that only, you know, works for that company, as it were. And she said, oh, we're just not even looking at it because we think it's a blip and we think that nothing's going to happen. This was 2019, right? So that's a bit concerning if the people who are meant to be looking into the future have already decided that this is a non-entity. And in the last 18 months since she said that to me, crypto has hit, Bitcoin at least, has hit its all-time high. And it is quite clearly not going to go anywhere. So yeah, so I don't think it's going to stop the progression from happening. I just think that what's going to happen is people will be unnecessarily left behind, you know, because they're in denial.
Yeah, it'll just be like trying to make, you know, catch up on all the issues that they have to cover.
Yeah, exactly. And, you know, I mean, there are people that work in law now and you watch them type and it's this, you know. So there are people who still, so for example, one of the things we do as lawyers is we dictate. So we have a little machine and we just talk into it and say, can you do this letter to so-and-so, and you say, tape it, type it up, done. Back in the old days, you had basically a tape recorder and you had teeny tiny tapes and you would clip that to the file, that would go to the secretary, she'd listen to it, she'd type it and she'd do it. There are still people now that do that. And it's got to the point where those tapes cost a fortune because nobody makes them anymore. But there are still people who would rather spend 50 quid a month on those tiny tapes than just take a phone and record your audio and email it to your secretary.
Yeah.
That's the world we're living in.
Wow. It's crazy.
Yeah.
And I'm sure there's many frustrating things. Would you say these things are the most frustrating in law, or are there other things that you'd say?
I think it depends on the area of law.
Yeah.
So what I do is not black and white. So with things like conveyancing, for example, it's very, well, this is a house, this is how much you're paying for it, and this is what's going to happen. Whereas in family law, you've got a person's life that you are trying to divide into two whilst keeping it the same. That's very difficult to do, especially when people's sort of preconception of what they think their quality of life was. So, you know, having to try to explain to somebody that Botox is not a basic need and that it doesn't necessarily have to be paid for straight away, you know, and also explaining to somebody that, yes, you did give her a lot of expensive handbags, but no, you can't have them back because they were gifts and they've gone now. You know, I actually had a client once ask me if he could have money back because he paid for his wife's breast implants. And you just think, what are you trying to achieve? Like, you know, I mean, I guess at one point you can suggest there's reasonable enjoyment there, but it's just your ability to push that claim is seriously limited. So it's, you know, there's so many different nuances to it. And so what makes that difficult is trying to manage clients' expectations. You know, it's trying to say to a client, look, I'll fight your corner until I can't physically fight anymore, but I would be remiss if I don't tell you that we're on the losing side right now, you know, and we need to get back onto the winning side. And I suppose the frustrating part of it is, more often than not, the reason they're getting divorced is because they don't know how to communicate with each other anymore. And they have totally different understandings of what their quality of life is like. You know, so it's not unusual for there to be a breadwinner who doesn't like spending money and the person who doesn't work who will quite happily spend the money. So then the problem you have is, okay, well, we're getting divorced and I burn through £2,000 a month. So you need to give me that so I can just carry on doing what I was doing when we were married. And then the person is saying, well, hang on a minute, I've worked myself into the ground and now our marriage is over. I don't want to have to give you anything. You can go away. You know, so when you've got that as your starting point, trying to get those two people to meet in the middle can be quite tricky. But I would say across the law, the most frustrating thing is judicial availability. So you know, if you think how difficult it is in the NHS right now, you know, last night there was not a single emergency paediatric bed available in this entire country. So that means that if someone took a child into A&E yesterday and that child needed an emergency bed in a paediatric ward, one did not exist. That's quite scary. Yeah. The judicial system is also suffering substantively because the problem you have is, prior to the pandemic, we were already over capacity with the number of hearings that needed to be heard and the lack of judges that we had. We then had to shut the court system for the majority of hearings for at least 3 months. So what we had last year is between March and July, so many of our hearings were adjourned and they were pushed further into the year. So then you've suddenly got a 3 to 4 month chunk of hearings that were already delayed further, then everything else that's been listed in the interim is delayed further. And then the reality is COVID has stressed relationships. So we have had more people contacting us. To be perfectly honest, they probably would have got divorced eventually anyway. This just kind of pushed it forward a little bit. But yeah, so all of that combined has just made it crazy. Yeah. You know, it's like I'm getting listings for hearings in January now because it's going to take so long. And it's frustrating because, you know, all these people want to do is they just want to go in front of a judge and say, we can't agree, you need to help us, you need to tell us what to do. They've got to wait 8 months for that judge to tell them what to do. And in the meantime, some people, they can't afford to live separately from each other. They don't even have a house big enough to have a separate bedroom from each other. You know, so they're having to share a bed with a person that they are getting divorced from. You know, they're getting emails from their solicitor, and they're sleeping next to the person who's getting emails from their solicitor, basically telling each other what the other person is saying while they're lying next to each other. You know, couldn't think of a quicker way to waste your money, to be perfectly honest. But yeah, so that creates a problem. But that's why arbitration is so good, because that helps take that out. But again, that is a luxury that some people can't afford. You know, if an arbitrator is charging you between £5 and £7 grand to do your hearing, if you're fighting over a matrimonial pot of £70,000 to £100,000, that's, you can't afford to chuck 10% away of your matrimonial pot just to get the thing decided if you can get it done for free further down the line.
Yeah,
You know,
I guess oh, sorry.
No, carry on.
I'm going to say that's the issue with crypto as well. So these people are so overloaded that they just don't have time to sort of learn about it. Then
Exactly. So you're so overloaded with what you just have in front of you. And then also from the crypto perspective, if you're waiting 8 months to get to your final hearing, what's going to happen to the crypto market in those 8 months?
Yeah.
You know, if you think you had, imagine if you had a hearing listed in January 2018 compared to a hearing listed in April 2018. Yeah. That could be a very different outcome. Very different.
And we're seeing that now, where it's halved in price over the last few months.
Yeah, exactly. So, but that's why I would always be very cautious about, so there's an activity that we do in family law called offsetting. So you're saying, well, you keep the house and I'll keep this. And they're both worth roughly the same. So off we go. So what people have started to do is they're offsetting the crypto against other assets in the marriage. You know, and it's not, I mean, it makes sense to some degree. You know, the person that's invested all their time in the crypto doesn't want to give it away. They want to keep it. They think it's going to be worth more, right? So there is some value to that, but it also carries a huge risk. You know, as of last year, you could theoretically have had a portfolio that was worth more than your house. So you give your house to your ex, and then suddenly your pot halves in value and you've got nowhere to live. That's a difficult decision to make.
Yeah, definitely, I can imagine. So sort of going back to sort of crypto law, what would you say are the greatest misunderstandings people have about it, legalities of crypto?
Oh, so the one thing I always get asked is, so if I buy Monero, that means I can hide all my assets, right? Like, I get asked that all the time, and I just have to go, okay, A, have you checked who's actually trading Monero lately? Like, it's not on that many platforms anymore. Have you checked the value of Monero recently? And this is the problem with, you know, tokens, is their value is dictated by who wants to buy them. You know, and with something like Monero, the life of that token was always going to be limited, because the more this stuff becomes worth money, the more governments are going to be interested in it, and the more they're going to want to regulate it, because the higher the risk, it's going to have an effect on the economy. So they have to be involved. So having a token that is completely untraceable and completely decentralized, that was never going to last long. So firstly, I always say to them, you can invest in it if you want, but good luck trying to sell those tokens. I'm not really sure that's a good idea. But also, secondly, even if you put it all into Monero, it's got to come from somewhere. So wherever the source is of you putting it into Monero, that's what I'm going to see. You know, if you upload 10 grand from your bank account to your Bitfinex or your Binance account, and then you just put it all into Monero, I'm going to see all of that. I'm going to see you put that money on that trading platform. I'm going to ask you for the transaction record of that trading platform, you know. And I guess, you know, to be devil's advocate, you could say, oh yeah, well then they can amend the trading platform printout and they can change it and they can do this and they can do that. Well, fine, but it's going to have a wallet address. I can put that wallet address into the software that I have that traces what people's wallets do, and I will be able to see what's happening in that wallet. And if you've put all of your Monero in that wallet, as soon as you move it, I'm going to see it.
Yeah.
And I'm going to know that you've disposed of it and that you've made a profit on it, and then I'm going to be coming after you for the profit. So you can only run so far with something like this. Plus, you know, the other side of the coin is, if you're the sort of person that wants to screw over your ex so much that you want to hide all of your assets, you'd do that whether crypto existed or not.
Yeah.
because that's just the sort of person you are. You know, offshore trusts exist for a reason. You know, all of that stuff is well and truly established if you really want to try and be an arse in hiding your assets. You don't need Monero to do that if that's what you really want to do. But it's certainly not the quick fix that people seem to think it is. What I would say, you know, if somebody really wants to be clever and try and protect their assets from their marriage, you move everything a good 12 months before you decide to leave your partner, because when you go through the disclosure exercise, you disclose up to the last 12 months. So if you really want to be that person, that's what I'd do. Not that I would do that, but you know. But yeah, Monero is not the answer.
Yeah, okay. Yeah. I've definitely heard a few people mention Monero and sort of it can't be traced. And you said sort of the people, you know, obviously the government and FCA and stuff clamping down on these projects, and we've seen it with Binance recently. Do you think that will continue? That they will continue to do that? Yeah, and
yeah,
right.
It will, and it's I don't know how to describe it. I think it's kind of like, you know, sometimes if you're on a beach and you can see that rolling cloud coming towards you on the horizon, that's the FCA. Like, that's regulation coming towards your sunny time, basically. It was only a matter of time, you know, and this is why Coinbase have been so successful, because they were on top of KYC years ago. You know, I can remember opening up my Coinbase account with a picture of me holding my passport.
Yeah.
You know, that they do that because they knew that that was the only way that they were going to survive. And this is what I say, you know, the more it's going to be worth something, the more they're going to have to do something about it. But it's been interesting. They have been very reactionary. So, you know, the tax guidance from 2018 said, this is such a high risk asset that it can't be taxed because it's effectively gambling. And if you make a profit on it, good luck to you. But we don't think you will, so we're not interested. They did not change that until the beginning of 2020, when things were starting to go up and things hadn't gone away. And they basically said, oh, actually, we're going to tax it all. And we're going to tax you on income tax if you're a day trader, and we're going to tax you on CGT if you sell anything, if you transfer it to fiat, if you exchange tokens for other tokens. Yeah, all of that is taxable. So all of those micro transactions you've been doing for the last 5 years, you need to figure out how much tax you have to pay on every single one of those transactions and declare it, which is huge. And then the other problem you have is people like us, where, well, we didn't put any money in. So we've never invested anything. So, you know, how do you quantify the gain when you're starting at zero?
Yeah.
And also, how do you quantify the gain when you've made losses? You know, we've sold things and then we've subsequently watched it go sky high. You know, like I can remember when we sat on Litecoin for ages and it was doing nothing. And we were like, oh, nothing's going to happen with it. Let's just sell it. And then we sold it, and then it literally like doubled overnight. Like, for God's sake, you know, one of those things. So yeah, so how do you quantify that loss? You know, so there's a couple of forensic accountants that I've started sort of speaking to now, because not only do we have to think about tax from a personal level, but also if my clients are having to sell tokens as part of a divorce settlement, we need to make sure that the tax man isn't going to come knocking.
Yeah.
And we also need to make sure the other side understands, yes, it's worth 100,000 over here, but he has tax of about 40k. So actually the realizable worth is 60. You know, so you're doing all of that calculation in the background at the same time. But yeah, it's not going to go away. It's only going to continue. But I don't see that as a bad thing, because I think if we didn't have regulation, we would just have it be banned or restricted, which I think is worse. I would rather that it continue to be part of the progression of our society and have it be regulated than for it to disappear altogether, which I think would be a great shame. And sadly, if people treated everybody fairly, I would not have a job. Yeah. So the concept, the utopian idea of decentralization and no regulation, an internet currency that is controlled by nobody, great idea. But human beings are pretty shitty. So it just is never going to work, sadly. People are going to take advantage. You know, you're going to have your whales, you're going to have those people that pump the market because they're trying to make as much money as possible. And if there is no regulation, the only people that are going to be damaged by that are the small people that have put in all of their life savings of 25,000K, and that just goes because someone's bored on a Sunday and they want to kill the market because they want to buy it cheap and then pump it up in a few months' time. You know, so difficult.
Yeah, I can imagine, very difficult. So are there any other interesting cases you've heard about or you've sort of been involved in terms of cryptosphere?
Yeah, so I'm definitely starting to get more variety. So at the beginning it was sort of, oh, we've got a few Bitcoin, or I've played around on Coinbase, but that's pretty much it. I had one case a good while ago where we discovered that the wife was hiding an ICO connected with her company. So she disclosed all of her company assets, and then I went on the company's website and I saw a little link in the bottom corner that just said token sale. And I thought, ooh, what's that? So I clicked on it. This was like peak ICO, right? So I clicked on it, full ICO website. It's like not been disclosed in any way, shape or form, never even been mentioned before. And then I put her name into Google a bit more with the token sale. Loads of crypto stuff came up. She'd been giving talks at events across the world. She'd been sort of touting this business. You know, this was very public. So that was a difficult scenario because there was an element of, I don't have anyone that can tell me if this ICO is going to be worth anything. I've spoken to my contacts within the crypto space who have told me it's a bit of a jumping the shark ICO that probably isn't going to make a lot of money, but I have nothing to quantify that that's the case. So what we had to do in that scenario is we basically used it as a bargaining chip, and so we tricked them and we said, you know, you haven't disclosed A, B, and C. You need to tell us everything. And so they told us about A, B, and C. And then I said, oh, great, but I've also got D, E, and F that I didn't tell you about, but I do also know. Yeah. So you haven't told me everything. So yeah, so we sort of chucked that at them and said, if you don't give us what we want, we're going to do all of this. And they went, okay, fine, you can have what you want. So that worked quite well. But what I'm getting now is I'm getting more cases where people are saying that they've forgotten their password.
That's hard.
They're going, well, I can't access the wallet, so sorry. But that's when the watch list comes in handy.
Okay. So then you look at the activity and how active they've been.
Yeah, exactly. And then so what I've been looking at doing is using sort of like an unless order. So basically my client receives either an income or another asset unless the wallet unlocks, and then she gets a share of what's in the wallet. So there's a financial incentive for the other party to get it unlocked, because then they don't have to pay the other things, but then my client is also still getting what they need because we've got the backup. But yeah, it's so easy to just go, oh, I don't remember, sorry, you know.
And I guess if people don't, you know, if they don't actually know, the lawyers don't know anything about it, then they might believe it as well.
Yeah, oh yeah, exactly. So they might just sort of go, oh, okay, well, fair enough, yeah, that's understandable. Or even if they don't believe it, they don't know what else to do.
Yeah.
So they get stuck. And then, you know, you've got this risk of spending a lot of money making very little progress.
Awesome. So Victoria, thank you so much for joining the podcast today. On to my last question, sort of what is one message you'd like people to take away from, you know, in terms of legalities of Bitcoin and crypto and what they should be aware of?
So I think what I would like people to take away from this is that the easiest way for you to bring an end to something like a divorce is to be open and to be clear and to be honest. And if you do that, it's a lot easier for everybody involved. I would also hope that people understand that they must do their research when they're instructing someone like me to make sure that they do understand the assets that they're working with. Don't be romanticized by the big London magic circle firms that tell you that they know how this works. I am being paid by those companies to tell them what to do on their files. Right. So if you do want somebody that knows what they're doing, just come straight to me.
Perfect. And how would they do that if they wanted to talk to you more about it or get in contact with you about this?
Yeah, sure. So I'm on Twitter _Vicky Clarke _. My firm is called Watson Thomas Solicitors. Pop them into Google, you'll find me. If you put in Victoria Clarke crypto divorce lawyer, you will find me through various different platforms. And if anybody comes to the Curry Club when it opens, which it kind of is at the moment, we've had a couple of in-person ones, haven't we? I'll be at those too, so people can come up to me and have a little chat.
Perfect. Awesome. Yeah, I'm hoping to get down to London soon, so hopefully meet you all. All right, Victoria, thank you so much.
Thanks so much, Anthony.